Hello everybody, I'm Rabbi Danyiel and I'm back again to talk about financial success as it's linked or connected to Scripture. And I started this thing about 2 weeks ago where I talked about a few different things that could help you along your financial successful path. So today, the topic of discussion is insurance. And we're going to talk about insurance. But before we get into the insurance and understanding how the insurance game works, a couple of scriptures from Proverbs that is appropriate for this. So we start off in Proverbs. This is Mishle in Hebrew. So Proverbs 24, and we're going to be reading from verse 27. And what it says is, prepare your work outside and provide for yourself in the field, then build your house. You want to make sure that you plan and prepare. And then the next is, if you go to Proverbs 27, and we're going to be in 23, verses 23 and 24. What it says, know well the faces of your sheep. Set your heart to the flocks, for strength endures not forever. Does the crown of the wealth last from generation to generation? Okay, so the connection here is that once you start creating things, there has to be a way to protect these things, for you to pass them on to your family, pass them on to your descendants, pass them on to your children. Because there's another scripture that says that a wise man prepares for the third generation, meaning prepare for your grandkids, to pass your wealth on down to your grandkids so that they can serve God with the wealth. I mean, that's the ultimate goal of the wealth, is to serve God with the wealth, to do the best you can towards other people with the wealth. So there's insurance, and this is how insurance helps us. Insurance helps us to protect homes, cars, against the unthinkable, against crazy things that happen in life. But we've been trained and taught, basically, that all insurance is bad, like it's a necessary evil. And that's not necessarily the case. And part of this comes with not understanding all the different aspects of insurance. Because just like everything else, insurance is a game. And there is a lot involved in insurance. So just to explain a couple things. First, most people are familiar with term insurance. It's basically like insurance you're going to have on your car. You have term insurance. There's a set term. It relates to your car. The car is insured. You know, auto, home, liability. From business insurance, these insurance plans are very set to specific terms, and they're regulated by contract law. And then on the other side, you have whole life insurance. And whole life insurance is a little bit different, because whole life insurance can be used to your advantage. If you really want to learn about that, there's a couple concepts you can learn. One is called the infinite banking concept, also known as bank on yourself, be your own banker, family banking, okay? Now, what it allows you to do is build up cash, but it's a tool. It is a tool to be used. So don't go get a whole life insurance policy and just let it sit on the side, because you're wasting the ability of that whole life insurance to really be used as a tool. So it's a tool, and it's made a tool by adding things to it called PAU riders, paid up addition riders, long-term care riders, etc. I have one policy myself. I have it linked to the S&P 500. So it is a whole life dividend paying mutual with Guardian Insurance, and it is linked to the S&P 500. So I am guaranteed anywhere from a 4% return to a 12% return. It caps out at 12%. So I'm guaranteed every year for my annual dividends on that. I'm able to put in up to my MEC limit, which is it's a limit that the IRS allows before it flips from being an insurance policy into a modified endowment contract. And I'm able to put up to $40,000 inside of this. So what is a 4% on $40,000? That's like roughly off the top of my head, 1,600 or something like that. But what is a 12%? A 12% is roughly about 4,800. I mean, that's a couple paychecks, right? I mean, that's really good right there. There's also another insurance policies that are similar to the whole life insurance, which is called the Index Universal Life. These are great sources for leverage because they are dividend paying. You take out the money, you leave the money into your cash value to get the dividends on it. and then you take a loan, you collateralize that, you take a loan against the insurance company. And when you take a loan against the insurance company, you use that money to buy real estate. You can go buy tax liens, you can buy tax deeds. If you have enough in there, you can buy, finance your own vehicles instead of using the bank, in which case all that financing charge that you lose to the bank start going back into your insurance policy yourself. So you can end up saving a lot of money overall. And in the end, all of it goes to your death benefit payout to your kids. So it's wonderful, it's great. Now, why is this? This is a lot better than a 401ks or an IRAs or a TSPs, because that locks up your money and you can't use it. So you can actually use this as a financial investment tool. But if you're just going to throw your money in there and sit on it, it's not the greatest. It's better to use this leverage for the entrepreneur. And if you're going to do it for entrepreneurial reasons, it's awesome. But it still outshines 401ks, IRAs, TSPs, with the exception of maybe an IRA that is a Roth IRA, a Roth TSP, because you're paying on the seed and not the harvest. And that's a very important concept to learn. You want to pay on the seed and not the harvest. But most 401ks and IRAs are designed so you're going to take the tax advantage now on the seed, and then when it's time in your retirement, when you need the money most, you're going to have to owe a lot to taxation to the government. And that hits you hard, because that's what the government wants. The government doesn't want you to take Roth IRAs and Roth TSPs. The government really wants you to wait and then take the taxes, because they're going to get a bigger share when the time comes. And this affects also your Social Security, because if you put in a lot of money because your harvest grew a lot, and guess what? You're going to have some problems with that, right? Now, the benefits of having life insurance policies is they never actually lose value. It's not like the stock market that tanks and you lose half your investment. It takes so much more to gain that investment back. So between the 2000s, in the late 80s, 2000s, 2008, these crashes happen. And what happens if you're on that side of the roller coaster when it's your time to retire? It means you're not retiring. It means you're not ready to move on. And personally, I don't believe in retirement. I think that you should always have purpose in life. But it would be nice to get to a point where retirement income can come in and I can just have my own purpose, and I can just do other things like I want to. Just write my books, whether I'm successful in writing books or not. It doesn't matter. You can do what your heart's desire is to do at that point. And that's what I think most people want, is when you hit your retirement, you want to be able to do your heart's desire and have purpose. So the question is, you want to pay on the seed or you want to pay on the harvest? So these are all games. Now, it's leverage for the entrepreneur, and sometimes it sounds too good to be true. Okay, so how did Walt Disney make Disneyland and get all the financing from that? He used his whole life insurance policies. How did Ray Kroc make McDonald's as huge as it is? Because he used whole life insurance policies, he used the leverage, he understood the leverage. After using the whole life insurance policies, he shifted business, and the business was shifted this way. Somebody would ask him, he would coach people to ask him, what's the business of McDonald's? And he would say, and they would say, hamburgers. And he would laugh at him, say, no, because the business of McDonald's actually is the real estate, and McDonald's owns more real estate than the Catholic Church. So think about it. Why do you want leverage? Why do you want these whole life insurance policies? Why do you want to learn the insurance game? Because if you learn it properly and do your due diligence on all of this stuff, whatever I'm talking about, whether it's taxes, whether it's finances, whether it's insurance, whether it's real estate, do your due diligence, because you're the one ultimately. It's your investments, it's your life, it's your finances. You got to do your due diligence. So one way to do due diligence on insurance policies, to check out these type of whole life insurance policies and IULs to see if they're legit, is you can refer to the IRS code itself. The IRS code 7702 is what puts limitations on these contracts, and they call them MET contracts. They put limitations on them, so they put a limit on it. If you exceed the limit in the policy, you can flip the life insurance policy into being a modified endowment contract. So you got to be very careful about that. And then you're going to be paying taxes on everything. So you don't want that to happen. Now, this is the nickname the 770 account. So you might have heard that before. 770 account. That's just another way to, it's related to the 7702 IRS code. Okay? And another way you could say, well, wait a second here. How else do I know it's true? Go to any bank and look on their financial statements. And you will see in their asset column that they have a lot of life insurance. Why do they have so much life insurance? Because it's a hedge. Especially if you have these policies that are linked to things like the S&P 500 that is not actual stock market, but linked to it, and you're guaranteed to not go down when the stock market goes down. So like I said, my policy, I get a minimum of 4% return, period. Stock market could tank. S&P 500 down. I'm still going to get 4%. Now, on the upside, the craziness, I might get 12% cap, but overall, that shift in up and down is less traumatic to the overall investment. If you have massive dramatic shifts, then it takes a lot more to climb back up. Okay? So you got to ask a question too. Why does Suze Orman and Dave Ramsey always talk bad about insurance? They're always bashing insurance, saying buy term and invest the difference. Buy term and invest the difference. And you got to wonder why. So, I have an accounting degree. I have a couple MBAs, and one's in accounting and one's in global management. And I've done a lot of studying and research on this stuff. And I used to drive around on Sunday mornings, not Saturday mornings, but I'd drive around on Sunday mornings, and I would listen. I'd drive to my guardrail unit, and I would listen, and I'd listen to, I'd drive all over, and I still listen to like Dave Ramsey in the afternoon and stuff. When I was driving Uber and Lyft, I would listen to it in between calls. I would listen to Dave Ramsey, and I'd say, this is good, this is good, this is good. But he'd always say, buy term and invest the difference. And I don't understand, okay? And then I started realizing it, and then I started listening to it. The reason why he does that is because he wants people to invest in mutual, because that's who all his advertisements coming from. He is backed and supported by advertisements of mutual funds. So of course he's going to propagate mutual funds, because that is how he's making his money. He is literally making a lot of money on mutual funds, but he's making a lot of money off of selling mutual funds by being a spokesman for mutual funds. That's how he's making the money. It doesn't mean that everybody's going to make money on it. And as we know, a lot of people have lost a lot in the late 80s and the 2000s and 2008, 2009. These bubbles and these crashes, they take a lot of people down. And I remember I went to work for the government after around 2008 as an accountant. And I was hearing some other people that they're talking about their TSP, which is the government equivalent of a 401k, how they lost half of their value pretty much overnight. Half, like 50% overnight, because of these housing market crisis that took place in 2008, 2009. And that's horrible. And you wouldn't have that in insurance policies. So it's something to consider. So what's important to remember is insurance policies are regulated by contract law. They're not regulated by tax law. The money you put in most of the insurance policies are after-tax dollars. And when you pull them out, because they're life insurance, and there's a proper way to pull them out for you not to be taxed on them. If you just pull them out as a disbursement, that you're going to get taxed on anything beyond what you put in. However, if you learn the rules and the policies and the games, you can pull the money out, you can use it as an investment tool, you can flip properties, you can flip homes, you can flip real estate, you can flip cars, you can flip storage units, whatever. You can use it to start businesses. You can use it it's a great entrepreneurial tool. And that will help you go further. But there is some things you need to realize. You got to keep account of your flocks. You've got to pay attention to where everything is at. And that's why Proverbs 24 and 27 and Proverbs 27, 23 through 24 is so important. Some recommended reading on this to really understand better the concept of infinite banking is Nelson Nash, Be Your Own Banker, and Bank on Yourself by Pamela Yellen. And I would also recommend any books by Robert Kiyosaki, because I've come to realize he really has an understanding. Another problem that I had with Dave Ramsey is he bashes on gold, and he says that, he talks about biblical principles when he talks. However, I've read the scripture inside and out, and I'm constantly reading it, and I follow it, and I believe in scripture. And scripture talks about gold as being precious and wealthy. So you got to ask, is he just saying this, or does he not believe what he says? Does he not believe what's in the scriptures? Because the scriptures do talk about gold and silver and precious metals as wealth. Excuse me. I think that's pretty valid. And Robert Kiyosaki thinks it's valid, and the reason why we have so many problems with inflation, the reason why we have so many problems with all the other money that we have problems in the stock market and the bubble crashes and all this other stuff, is because we are not linked to the gold standard anymore. It was taken off the gold standard in 1971 by Nixon, and when that happened, now they can print as much money as they want, and they devalue the dollars. And that's why gold doesn't look like it's the best investment anymore. But the bottom line is gold is real. Gold is tangible. When you're talking about tangible, real things, those are the things that are going to make have value when everything else crashes. So gold will always have value. Gold will always have an intrinsic value, just like a house will always have an intrinsic value. Where fiat currency, and that's what our currency is in the U.S. and all countries, is fiat currency. What is it backed by? It's backed by people's faith in a government or the military. Something to think about. So anyways, what I'm saying is learn the insurance game. Learn the games you got to learn. Start your own business, like I said in the first one. Learn as much as you can about taxation. That kind of feeds into insurance policies because it helps you hedge against taxation. And then also the next thing I'll talk about is real estate. And so these are all linked, but if you do one of these, you're going to change your life massively. You get into learning all as you can of all of these, it will greatly influence and bless your life. So with that, I say be blessed, have a blessed day, have a blessed weekend. Go out there and have some faith and keep trucking, keep going forward. And life is beautiful, and enjoy it.